Hello everyone and welcome back to the channel. So I would like to share this video with you. It's from BNN Bloomberg. It was released on YouTube on March 28, 2024, so which was exactly 4 months ago. So let's just talk about it and let's see, because some of these predictions, what they were saying back then, they actually came true, and there's more in the video that they're actually talking about for the year 2025. So a couple of points is limiting the population growth, how immigrants will affect the housing market, and how they already affected the housing market and employment and all of that stuff. But let's get right into the video.
Reaction from Royce Mendez, who's managing director and head of macro strategy at Desjardins. I mean, those numbers give us a lot to work with. What is your takeaway?
The limits the federal government is going to be placing on population growth, assuming this all materializes, is, I think, the biggest Canadian macro story that's come out recently. These are major curtailments to population growth, and reducing not only limiting the growth in temporary residents, but actually reducing the number of temporary residents has, changed our outlook for the Canadian economy. We put out a scenario just last week on how it changes GDP, it changes employment. Things are not looking as bright as they were. As I said in the last segment, the only reason we avoided a recession last year was because of strong population growth and a strong U.S. economy. And now you're removing one of those from the equation. I think every business in this country has probably benefited from a growing population, more people to purchase goods and services. They've also benefited from having more labor available to hire. We were facing some pretty severe labor shortages a couple of years ago. One of the main reasons that those have dissipated is because we've introduced so many new people who can work. As we move forward in time, if we see these limits put in place, that's going to remove a big growth driver for the Canadian economy, and it's going to reduce the available labor pool for businesses in this country.
So let me just stop here for a second. You see, even they're saying that we should have had the recession in 2024. But just because of all the influx and everything, yes, and I do believe it, right? All the businesses were working 24/7 because the demand was huge and was high, right? So obviously housing market, people have to live somewhere, people have to rent something, people have to be and do something in order to survive here. Some of them, they were finding creative ways, but majority of it is just crazy. So further in the video, a couple of concerning things regarding the economy in the United States and the economy in Canada, and the differences is just crazy. So let's get back into the video.
I just want to take a step back, and we can also share the numbers on our aging population, which got us to this conversation in the first place, right? Do we want to look like some European nations in 10 or 20 years? And so we have seen this immigration policy. And to your point, you're seeing some of the benefits. But as Heather's report highlighted, there are the complications in the short term as well. Could we have known? I mean, did we have to go through this process just to see how Canada's economy could adjust to these record population levels to kind of reach this conclusion?
So that's an interesting question. Do we have to jump through all the hoops in order to find the end result? I mean, aren't there professionals or people in charge that actually can foresee or forecast some of these outcomes? So let's dig back into the video.
So we've always known that we need to introduce new people into the economy to replace the workers that are retiring and help out with the care economy. That being said, things got out of hand in the past couple of years with regards to temporary residents, and that's particularly people on student visas and people on work visas. Just to put this in context, last year, the Canadian economy saw population increase by 1.3 million. The U.S. economy, which is 10 times larger, saw population increase by 1.7 million.
Canada increased by 1.3 million. US increased by 1.7 million, and they are 10 times bigger. This is nuts.
That is a stark stark contrast when you think about it in those terms. That's how fast the population was growing. So it's no surprise that a housing market that was already struggling pre-pandemic to keep up with demand has been absolutely decimated in terms of affordability after seeing this surge in population growth. And that's why policymakers had to do something to address this. They were trying to do things on the supply side for the housing market. Those are more long-term in nature answers to these problems. The shortest term answer is to curtail population growth.
So just a final question on housing, but to lead up to it, I feel like you've outlined that we have grown through policy. We've had growing pains through policy. Policy is evolving to address those growing pains, and then that raises new questions about our growth as a result. But then on the housing front itself, because you have other considerations like the interest rate environment, you've joined us on a number of occasions, your concerns about like the mortgage renewal process over the next couple of years. So add this update to what's going on with interest rate policy. What do you see in the cards for the housing market?
So he's going to be talking about what's coming up in 2024. So mind you, this video was shot in March. So that was 4 months ago. And the gentleman, he predicted it actually right on the pinpoint. But then he gets into the year 2025, which is actually scary.
I think 2024 might be a bit of a mirage. So you might start to see policymakers talk about rate cuts or eventually begin cutting rates this year. And maybe you will see a pop in the housing market. It's 2025 where things begin to get really worrisome. Number one is because you'll see the impacts of these limits on population growth. So the demand for housing won't be growing anywhere near as fast as it has over the past 12 months.
Can I just jump in and ask, is that a bigger issue to think about than interest rates going down by 50 or 75 basis points?
The big wild card is how much these mortgage renewals matter. If people are really struggling to make these mortgage payments, even if interest rates come down, we've shown on this show that the payment shocks for people are still large. They'll be paying a lot more because they took out mortgages in 2020 and 2021 where rates were basically at zero and you were getting mortgage rates of 1.5%, 2%. You're going to have mortgage rates much higher than that probably in 25. That's the problem. And if people are really struggling, then the housing market is going to be under a lot of pressure next year because you're not going to have the population growth to continue to fuel that upward momentum. So I think that 2024, whatever we see, if we see a rebound in the spring housing market, if we see a rebound when rate cuts begin, I don't think you can extrapolate that to believe that you know what's going to happen in 25 and 26. Those years could look very different in terms of the housing market and actually just generally the overall economy because population won't be there to paper over all of our other problems here.
All right, so that was the video. So let's comment on it. So think about it for a second. So they were predicting that the interest rates will go down, and they did, right? So we had 2 interest cuts at quarter each, so half a point up to now. We might see another cut, but what does it really do to the affordability? If somebody's paying a mortgage today with the high interest rates, it's not doing much. So we're talking a few $100s here and there, which is not helping significantly. But they brought up a couple of good points. So obviously, population increase, which that was a huge injection in our economy. Imagine 1.3 million people in Canada with a 40 million population. That is huge. So, and we can even feel it wherever you turn. The traffic got more it got busier everywhere all of a sudden. So we feel it. Only within 6 to 12 months, I felt the change personally, right? But getting back to if people cannot or they could not afford it, so 2025 is not gonna get any easier. And on top of that, will you have enough demand to catch on that supply? That's another thing, right? Because if we're looking at condos today, condos, they're somewhere in a ballpark of 9 months of inventory. Just to clear that 9 months of inventory and the new inventory that's coming and then new mortgage renewals and all of that stuff. So I did more videos on my channel regarding what you should do, if you should, get a private lender mortgage or another line of credit just to survive and stay above water because you have been sinking. I don't know, it's definitely something you have to think about and take into consideration, because it's not gonna be a smooth ride. Like, if you're gonna go in more debt just to survive, just to maintain your lifestyle, I don't think that is really the solution, right? Because eventually you will have to pay those mortgages or line of credits or HELOCs or whatever you want to call it. You have to pay it back. So I hope you got a valuable information today. The decision making is only on you. Try to dig for more information. But if you're stuck, maybe it's a good time for you to consider juggling your portfolio or trying to get out of this weird situation that you're currently in. So please like, subscribe, and share this video, and see you all next time.